All right, let's say hello to Sandeep Tandon of Quant Mutual Fund to understand what his indicators and what his models are suggesting. Are we likely to head higher, or is it time where markets are likely to consolidate? Good morning, Sandeep. How are things?
Things are good.
What will make it very good?
So I tell you, the pessimism right now, both in India and globally, is too high. Whether you're talking about all sort of fear, whether inflation or interest rate or COVID or any war, multiple factors are there which is putting pressure. I think at least from our data points of view, we talk about at least our predictive analytics models are indicating that we are closer to an inflection point. Okay, where currencies will change. Even Nasdaq or the US market, which has been given a very sharp correction, can give you a quick up move from the current level. So let's dissect this thing into the dollar index first. Okay, so the biggest worry people have, the dollar index has rallied sharply, is closer to the lifetime high. Okay, and that's the way I defined it. The way dollar has moved is all. It's not about Russia and US battle. It was the relevance of dollar which was declining, and US put best efforts to ensure that the dollar remained relevant. Okay, so we are closer to that tipping point where we believe that it's reached inflection point. And if we dissect the dollar index both in terms of JPY or euro, which is the largest component, there also it's showing the signs. Euro is the biggest component, is also showing sign of bottoming out in euro at least. And so is the case with the Asian market also. Whether you look at the Asian currency dollar index or the emerging market currencies, if you look at versus dollar, they were very, very stable. Only in the last 8 or 9 trading session where we have seen sharp depreciation in Asian currency, which was not the case even when Russia and Ukraine war was its peak. Okay, so something which was more stable has also corrected. Typically, this happens when the most stable thing also corrects in the end of the cycle. That is a clear indication that something is changing, and we are at the inflection point in terms of currencies. Now let's come to uh, look at the risk appetite of the global market. We talked about in September 2020-21 that risk appetite has peaked out, and we have seen a euphoria. And if I dissect the euphoria between growth and value, so value is early stages and growth has peaked out from multi years perspective. And our view is that this growth, or in terms of valuation multiple, has peaked out for a growth stock could be from a decade perspective. Maybe you will not see that sort of valuation for next 1 decade or the current decade itself. Now, but that is a much larger, longer term perspective. But if I have to look at the risk appetite from a very near term perspective, it is actually inching up for global markets also, which is a very positive sign. So first signs of data points has come. And that's the reason I'm saying that even SPX or NASDAQ, which has been beaten down significantly, and even yesterday, NASDAQ was showing signs of weakness. I think that those two indices are also verge of bottoming out. Okay, longer term perspective, we remain very concerned about US market or dollar index, or the relevance of dollar or the relevance of US market are also a big question mark as compared to emerging market. But from a very near term perspective, we have reached those data points where I will like to be long on the market, and as long fear remain high, I will be participating in this market. That's the reason we are 100% invested at this point.
So, Sandeep, for Indian markets now, let's see to make a new high in the month of May, then what will happen to the good old line which every global analyst has used in the past, which is in the month of May, sell and go away. What you are saying that in the month of April, buy and benefit in May.
Definitely. So it is, I tell you, these are the seasonal factor which people look at. It may or may not be effective. There is no, statically, you cannot prove it right, because most of the time it has happened in the past and this has become a very important phrase. But I would like to ignore that part. My sense is that we would like to play on the human side. Okay, as long fear is there, which is the case currently, maybe in the month of May, we'll see whether mid-month or end of the month, we see there is a good amount of complacency. I will also like to prune down the exposure. I will also like to book profit. But that is not the case right now. Right now is the case where panic is spreading, people are giving up, people are surrendering their position, capitulation is seen on various asset classes. So I would like to increase my long exposure in the market, given since right from 2022 beginning, we have said this 2022 will be more vulnerable and more volatile as compared to 2020-21. So you have to play for a smaller swings in the market, and that cycle is exactly we are approaching. It's like today, tomorrow type. So if you are, nobody can time it so perfectly. So we are reaching that inflection point where I would like to be on the fear and greed cycle, which we typically look at, the fear cycle is actually closer to a bottom. So I will like to participating rather worrying about what happened in the month of May historically, and as soon when data point changes, we will change our opinion.
So, Sandeep, you're not going anywhere in May, staying put in Bombay. That's what I read.
Very much.
Actually, the definition has changed after COVID. In the month of May, sell and go away. Where will you go when there is COVID? So no,
Now it's open. Now you can go.
Yeah, but it's not applicable now. Or habits have changed. Historical correlations have changed.
But why do I get a feeling that Sandeep Tandon would, regardless of COVID or not, still be in Bombay or tracking markets and not really go anywhere?
Because it's a brilliant opportunity. We should not miss out this opportunity when everybody is fearful. That's the time best to, it's easy to talk about theoretical thing, this is the best opportunity. So instead of doing a postmortem analysis, I would like to play on the front foot.
Playing on the front foot, where have you changed your positioning so that if you get a chance, you are maximizing? What is that loose ball which you identified which you want to hit out of the park?
So I tell you, as I said in September 2021, we have changed our core portfolio from growth to value, and growth stocks are just a trading position for us. Okay. So like we pruned down our exposure towards technology. We don't own any technology stocks in our portfolio for last many months. Okay? And so is the case with consumption names or FMCG names or the consumer stable. So I think these are the good way to play whatever data we are reading. So currently we still remain bullish on metals, irrespective of whatever smaller corrections we have seen in the very recent past. Okay. And we remain constructive on energy, power as a theme, capital goods as a theme, media as a theme. Okay. These are beaten down, neglected territories, great valuation, grossly under-owned. Nobody wants to even talk about PSU banks. So I think these are the themes which I would like to participate. Okay. And these are, at least since we are more of a data-driven house, at least whatever data is showcasing, and this is based on our predictive analytic models, we remain very constructive on Indian economy. We remain very constructive on emerging market as a theme. And it's a both absolute and relative opportunity game which we have to play.
Sandeep, the one space that I wanted to discuss with you is, pure play FMCG. Now, there's a lot of back and forth as we speak on this Indonesian palm oil export ban, etc. As well. But if I just look at the commentary, say, suppose from a Unilever yesterday, that seems pretty strong. We've all known about the inflationary impact of input cost pressures, etc. And that's been something that's been playing out for the last two quarters. It's not anything new. Wanted to understand whether the damage and the negatives are in the price and whether right now you would look to go contra in FMCG and add positions perhaps.
So let's put into this question break into two components, both from the short term and the long term perspective. As I said, from the near term perspective, everything has been oversold. People are getting capitulated, and so is the case with FMCG names also. From a very tactical positions point of view, or from a near term perspective, I think FMCG also looks attractive. Okay, but we have to keep in mind that you can get a trading opportunity, and it's a pure trading opportunity. But if I have to look at from a longer term perspective, we clearly believe that US inflation, particularly developed market inflation, will remain elevated till 2027-28. That is the thesis we have been talking about from 2019, that inflation will come with a bang, and both risk on and risk off environment will be affected in a big way. So from a longer term perspective, we believe agri commodity prices has potential to deliver 100 to 1000% move. That's the return. That's a call we have taken in 2019. And we have seen just a trailer of that, the way wheat prices has moved up, or rice prices are inching up, or coffee or sugar or any other agri names. Okay. So from a structure point of view, we remain very constructive, and the real impact will be felt with some amount of lag effect, and which can lead to a significant deterioration in terms of price multiple or valuation multiple of the sector. Okay. As I said, that by 2017-2021, the sector of the growth stock with the perception analytics data points are showcasing they have peaked out from multi-years perspective. So we remain constructive from a near-term point of view, but from a longer-term perspective, I think de-rating has just begun. These are grossly over-owned stocks. Globally, I think whenever you talk about margin pressure, the real impact will come from PE contraction. So my worry is that whether you want to be part of a basket where the sector or stock will go to a deterioration phase in terms of valuation multiple, or you want to be part of a journey which are beaten down names and will go through a valuation or multiple expansion phase. That's a call we have to take.
That's United Breweries for you. I just want to look at some of the liquor stocks and want to understand that where the liquor stocks right now are, because liquor stocks as a category, that's one category where the pricing power issue is never there. If barley or malt prices, they go higher, companies, they pass it on. Asian Paints is bouncing back, Berger is bouncing back, ITC is bouncing back. So the market construction is not looking bad at all. What is reversing? Bajaj Finance, Bajaj Finserv, Chola, HDFC. Those are some of the stocks which are reversing. Sandeep, how would you approach, let's say, something like an HDFC Bank? I mean, it is one of the most crowded and overowned stocks, but the stock has underperformed. What I'm trying to understand from you in this dynamism of growth versus value, even private sector banks now are reaching value zone.
So, from a very near-term perspective and medium-term perspective, yes, I agree. HDFC, both twins have also reached a not classic neglected territory, but it has reached a beaten down stage where a bounce can happen and you can get a recovery from the current level. And there's obviously their valuations are closer to ICICI Bank and corrected significantly in last 1 year. Okay, but again, the same question I just want to repeat: whether we want to take a call whether the private sector bank will outperform or the PSU. So we believe PSU as a theme, PSU bank has potential to outperform private sector bank. So we like to keep our portfolio more skewed towards public sector banks as a strategy rather than keeping skewed towards private sector. Yes, I agree from a near-term perspective or medium-term perspective, both HDFC twins, generally we don't comment on that, but since we're talking about behavior data, it's showcasing a signs of bottom, so it should be opportunity.
So in this entire market behavior matrix, one side is excess fear and consensus participation. On the other side, there is pessimism, there is disbelief, there is uncertainty, and there is low participation. Identify sectors and themes which fit on the overowned, over-discussed side and under-owned, ignored category.
So very clearly, all growth stock, where the valuation was stretched, some of the names which you just highlighted, so as a part of fintech companies, or technology companies, new age companies, or the so-called consumer-driven name, which was quoting at absurd valuation, not only India, globally. I think my view is a very strong view. Okay, this cycle has speak out for a decade perspective. So it's a very strong statement which we are trying to make out here, which instead of reading the words, we should try to conclude that from a longer term perspective, the multiples are giving a very clear sign has been out from a longer term perspective. And so it's a strategical call we have to take whether we want to participate in these names, even from the bounce back perspective. From a longer term perspective, I see all these names, so-called expensive growth names globally. I'm not talking about India in general, because our theme is more from a global perspective, is giving you early signs of indication that something has changed. Okay, what could be the quantum of change? What could be the duration of those changes? It's too premature to talk about, but since we are behavior point inflection strategists, that's our way we identify ourselves. At least our data points that say something has changed. So rather than saying that we'll wait for a deeper correction, we'll wait for a clarity, we have already changed our portfolio right from September 2021, so that we don't want to be part of this sector. So very clearly beaten down names, infra names, or power, or energy, or commodities. Okay, all those sectors and stock which has been significantly underperformer in last many years. And if you are seeing some of the improvement in capex cycle like capital goods, okay, capital goods definitely looks very good, and capital goods has own benefit in secondary and tertiary level derivatives benefit in multiple industries. Okay, so those are the themes which we have to identify and try to capitalize on it, rather than trying to say that these are the names which has been rewarded historically. They are the compounder stories, or these are the most admired category stock. I want to own it. I think something has changed for them, and I like to respect the data points and believe in what our data points are endorsing, rather than we seeing whatever historically these companies have rewarded the investors.
Okay, Sandeep, always good to have you on the show, and good chatting with you as always.